Friday, October 20th, market analysis, Stan Ehrlich. Good morning, TGIF. Hey, 10 o'clock California time, and we have made new lows again for the stock market indexes and coming pretty close to important previous lows made at the very beginning of the month. Now, the lowest low for this E-mini for the month was on October 4th. But the big day was October 6th, Friday, 2 weeks ago, when we had an ER bullish engulfing buy signal that worked very nicely for about 4 days. Then we had a bearish engulfing that caused this correction, so to speak, that we have in progress at the moment. But it is back down near those lows of early October. If we're going to have the October lows, which does have a great track record, 90% of the time in the last 30 years, we have seen a low during October. Now, we still have several days left. Today's only the 20th. There's a chance you could make lows lower than the low on October 6th, which so far has really been pretty idealistic. Oversold, in support area, and had a bullish green ER signal. So I'm quite concerned that this market has come down as much as it did starting on Wednesday by breaking into minor new low ground for about a week and a half. Then you got the follow through yesterday, and so far today, we're still down 2 1/3 points at the moment. And I don't see any major reversal. I'd need to come up to approximately unchanged, which is the high of the day, and go up a little bit more by the close at the end of the week in order to feel more confident about a potential reversal today. Now, RSI is not quite oversold, but close. You don't always need an oversold condition to turn back up like we had back in April 26th, for example, and a few days later again. But it certainly is nice to see it turn yellow. Oversold means it's a higher probability that we're about to or turning up right away. Now, granted, oversold can last a few days or even more. But again, when you see yellow, you should be getting prepared to get out of shorts and or get into some kind of long positions. And we're very close to that, but not quite. Next chart. The here we go. The NASDAQ futures have come down extremely close to the lows of October, which is October 4th in this case. And October 6th did have a bullish engulfing, but it wasn't oversold within the allotted amount of time, and therefore we didn't get a green buy signal. But it's close, very, very close. So we have challenged that low. This is a prime spot for it to turn back up again, but I don't see it happening yet. Again, it's the middle of the day. We've got almost 3 hours to go. Next, bonds. Oversold yesterday, first time for this move down. And today, we have a slightly lower low, and we're currently higher on the day by a bit. So I am expecting to see more of a rally to the upside immediately in the interest rate futures. Now, the T-bills did not get below yesterday's low, but it was oversold yesterday, and we are rallying nicely today. Now, this rally in interest rate futures could help the stock market turn around. Yeah, obviously, if I'm right in the interest rate futures, and it helps the indexes. We'll see what happens. I am very much looking for some kind of a rally to happen immediately in the indexes and interest rates. Next, crude oil, slightly higher high, trend is up. You've got for the last few months, since May, basically, March, April, May, higher lows and higher highs. So that dictates a trend for half a year plus, and I'm expecting to see more strength, and we're nowhere near overbought as yet. Next, natural gas. We are short. It's doing fantastically since our bearish engulfing sell signal on October 11th and our entry for ER3s on the next day at about 3.385. We have seen one big down day, 2, 3, 4, 5, and today is the 6th day in a row of net lower likely today, net lower close. So our stop has continued to drop down, 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 and is locking in a large profit at this particular point, about a whole 0.48 on a heating oil, natural gas trade. That's big. Next, heating oil may be topping out. Can't tell. Don't want to say too much if I'm not in a position to say something intelligent and hopefully correct. So I'm going to pass for the moment on the heating oil. Next, our buy signal at the bottom of the gold market again has produced a whopping great trade. I can't believe it. We are long the ER1 position from the high of the previous day, the day of the signal, and our stop has been coming up and again and again and again, and we are making, I think it looks like 1338, $1,337.36 at the current quote, and it's moving up and down the profit graphics as we speak. Great trade, a whopper. Next, this is the same trade. It just shows you how the stop is moving inside every day, where the daily chart cannot show you that. It shows you where the stop ended at the end of every day. If you were watching it during the day on a daily chart, then you would see the stop move up because the price of which, the yellow line would end. It would be changing periodically during the day. So we're still long. This has made new highs a variety of times this morning, and it's looking outstanding. Next chart is silver. Unfortunately, we didn't get at support in an overbought condition, a bullish ER buy signal. Too bad. On the next chart, you're going to love it. But I'm now into significant resistance and overbought for the first time today since we were last oversold. So we're coming close to the end of this rally. Probably well over half of the rally has occurred. I can't rule out there's a chance it could have a sharp little pop all of a sudden to 25 1/3, where the resistance really is. But we've got some in this ballpark that we are right now. So I'm watching for sell signals, but still bullish. Platinum, we got the low day. This is the ER1. When you make a high higher than the previous day and you're oversold, you get a signal. This is almost a new high close, not quite, and looking extremely good. Next, high-grade copper. Not much to say. Bear trend, lower highs and lower lows in general over a substantial all of this year. So, looking for new lows, and it may work its way all the way down to 3.37. And typically, that could be a very fast break because the end of bear moves and bull moves are oftentimes a blow-off type of activity, meaning super strong real fast or super weak, extreme weakness very fast. Next chart. We're still long soybeans from the day after the bullish engulfing for the ER3 entry and a close that was profitable on the first day, more profitable on the second day, third day, fourth day, fifth day, and finally today is the 6th day. And we are almost having a little bit of a reversal, not quite, but we are lower on the day and our profit is diminishing a little bit. But that was a great entry and tons of room for profitable potential. Remember, the automated trading system will take care of your entries and exits, but you can change the way it gets in a little and out so that you can tighten up your stop or manually get out and just stop the strategy from working. Whatever, totally flexible. Next, soybean oil. We finished a very huge, big bear move trade a few days ago. This is a possible, probable, so far, head and shoulder top of size. The first shoulder was July 5th. The head is a double top formation, which we got a sell signal on the high day before the crash. Well, before the bear move. A few, unfortunately, buy signals in the process didn't work. This one has worked, and it caused a rally enough to get us stopped out of our previous short position with a great big profit. We sold short at approximately 63 and a quarter, and we're out at approximately 55. Next chart. What may also be a gigantic head and shoulder top in soybean meal is now beginning to be ruined. This rally is too much, too high, and too far off the symmetrical levels, timing points. So I don't know what's going to happen, except we are now back into resistance and overbought, and it looks like we have a short-term top having started today or yesterday. I think it's going to pull right back down again to 375-ish, or maybe a little lower. Next chart. Corn is probably going to go the way of the wheat. So we had a little spike high today, and it's a significantly lower low and last. Excuse me. And looks like it's going to have more downside pressure before the bell rings. This could start the next wave down and start to challenge 470 and below. Next, wheat. Going to do the same thing, I believe. It already broke its support level back in August, and every rally basically since then has seen an end to it and a new low afterwards. So we may be just doing exactly that now. Last rally high, beginning another move down. Next chart. We are looking at cattle. Not very sure about it, except I want to point out that we got the top of the market. We got the top of the market. We got the top of the market. We got almost the top of the market, and we almost got the top of the market. We got almost the bottom of the market on that green bullish engulfing. Too bad there's not a lot of them. Next. And cattle, going back to cattle, we're probably going to break this 184 level and drop off to significant support of 182. That's what I'm looking for. Next chart is hogs. Broke some support, couldn't hold it. Now an oversold condition, but it's a downside breakout, so not that rare or unusual. Probably will go down another few days, bounce a little, and continue to go down more. I cannot rule out a challenge of 52 3/4, the previous low we had in late May. Can't rule that out. Next chart. OJ. I don't know. I had a sell signal, it didn't work. Yesterday we got stopped out, or this morning we got stopped out. Looks like this morning. And looks like it probably lost a little bit, not much. I'm waiting for another signal. There's some reason to believe that the green tree disease, I believe it's called, has finally been conquered, and we're going to grow some more OJ in Florida again. Right now it's killing off the trees and killing the oranges. Next, cocoa. Interesting. Until today, the closing prices were inside my potential shoulder high, timing point, and price level. So now I'm higher than I expected, but today is the exact turning point date. And I've got one of my rare bass-backwards reversals. This is an outside up day, but in an overbought condition. So I've seen these produce the beginning of down moves, but they don't look bearish at all when they finish the daily or session close. And all of a sudden, they just turned down. Let's see what happens to this one. Now, this could still be a shoulder high. I hate to say that. It's a little higher than my idealistic. Basically, because that was the actual high of this shoulder over here. I'm just fudging on a little bit on the average. But look what we got. Yesterday and today is almost exactly the same high we had on August 7th. So, got the body parts, got everything. It's just a little higher than I expected. The timing is dead on at the moment. Let's see what happens next. Coffee at the top of a resistance zone where it's topped out before in overbought conditions for about 6 days now. I think we're about to turn down. And that would be to these lows or even maybe lower. Next. Can't really say in sugar that much. I don't have a real good handle on it. Next chart. Cotton the rag, oversold again, keeps on working its way lower. No bullish engulfing, no ER buy signal, looking for the lows to come down to now 76.80, maybe even a little lower. And very quickly, when you're once into an oversold condition, usually it drops off pretty sharply and then finally finishes its decline with exhaustion, weakness, and oversold conditions and turns back up. When we're back to the E-mini, which is hanging in there at 3 points lower on the day on the spider at the moment, I'm very concerned about the indexes. I need to see it turn around and rally very strongly right away, or we could have a big problem here. This could drop off very, very sharply and very quickly. So I'm about to admit the October lows may be yet to come, but I don't think so yet. You have a great weekend. Let's see what happens next week.